Welcome to FinanceFeeds Podcasts. FinanceFeeds is the world's premier interactive Forex industry news source, providing the latest insights and current affairs from within the online trading industry worldwide. Enjoy our latest podcast episode. Hey everyone, thanks for joining us once again for FinanceFeeds Podcasts. My name is Nikolai Isayev. I'm editor-in-chief of FinanceFeeds. Joining me on this episode is Manu Choudhary, who's Chief Executive Officer at DMALINK, as well as co-founder of DeFinity Markets and co-founder of Crculus. Manu, thanks for taking the time to join me today.
Hey, Nikolai, thank you so much for having me on.
Always a pleasure. We're already in August. Summer's almost over. Wanted to ask you how your summer has been and if you've been doing anything cool and exciting.
Interesting summer. I mean, it's been about 6 weeks of rain here in England, so it's been a great time to do a lot of work. I've been unfortunately mainly doing work. Haven't had a huge amount of time for fun, but hopefully, if we can see a little bit of reprieve in the rain, then yeah, absolutely. I think I might even take a trip to the south coast, maybe venture onto the beach. But right now it's raining and it's 15 degrees Celsius.
Oh, wow. I'm sorry. Well, Manu, since you've been working hard lately, I wanted to actually ask you some very particular questions on some of the important points you've made recently in your public posts online on LinkedIn and elsewhere in some interviews. I wanted to ask about, retail CBDCs, specifically in developed economies like the UK and Europe, because they solve problems that don't necessarily exist there. But at the same time, you've praised wholesale CBDCs. And in the past, you've actually proposed a model in which commercial banks could issue stablecoins that are collateralized with assets held at central banks. So these would be something like a synthetic CBDC. I wanted to get your thoughts on some of these important points.
Yeah, sure. Look, absolutely. So I have been reasonably vocal, and I guess let me just give you some context. So again, there are two types of CBDC. There are obviously wholesale CBDCs, which I think are very useful. They will help streamline and also bring on a whole bunch of efficiencies that I don't think we have working particularly well today. And then we have the retail central bank digital currencies, which are solving a problem that I really don't feel exists. And I think, one of the things you have to be mindful of with things like blockchain is, and I was caught up in this myself, you get very excited by this technology and think every single problem in the world can be fixed with this wonderful solution. And blockchain is fantastic. I'm a big, big fan. But the reality is that it's not always the best solution. I'll give you, for instance. So we spent a lot of time and effort building a full ECN on chain. So basically a full matching engine, everything. And it was fantastic. And we were using one of the fastest layer ones that exists. And even with that fastest layer one in the world, it took us probably to an internal latency of about 500 milliseconds.
Mm-hmm.
The problem is our legacy tech stack, in inverted commas, has an internal latency of 300 microseconds. So it's not more efficient. It's not more effective. What we currently have today works a hell of a lot better. It's a lot simpler to use. So I think we have the same issue with the retail central bank digital currencies. I think there's a real lack of understanding from people. They think this is something new. This is something that is very, very advanced technologically, but the reality, it is not. We've had BDCs or bank digital currencies for over 50 years. And what is a BDC? Well, a BDC is the money in your account or the money in my account, bank digital currencies. And this is created when banks create credit. So when banks lend, they create money out of thin air. And that's what this is.
Mm-hmm.
Now, the existing system you have of bank digital currencies is decentralized. And as much as, for instance, if I want to get a loan, I'll go and see a local credit officer. He will assess my business and he will make a loan. In the world of central bank digital currencies for retail, it'll be centralized. There will be one counterparty making all those decisions. The other issue I have with this, and this is a real problem, I think, is that if you look at every single successful economy, there's a very, very steep correlation to that economy, its success, and the number of banks it has. So, for instance, when China joined the World Trade Organization in 2000, they went through the process of setting up almost 2,000 regional banks. Now, and I guess depending on how you assess these numbers on a PPP basis, I'd say China is probably bigger than the US, but let's pretend the US is still the biggest economy in the world. It also has the highest number of banks. Number two is basically China. Number three is Japan.
Mm-hmm.
Number four is actually Germany. Are you seeing a trend here? It's not a coincidence. This is a direct correlation.
Mm-hmm.
And what happens fundamentally with a retail central bank digital currency, and I know there's lots of variations, but let's look at the core, is you're effectively creating a wallet with a central bank. You're effectively disintermediating every single commercial bank. And you're kind of having the commercial banks compete with the central bank. So it's a bit like if we were playing a game of football and I was the referee, but I was also able to score goals because I
Hmm.
got a bit bored.
Sure.
That's effectively what you're creating. And I think people often miss this and they get very bamboozled and they get very distracted by the dazzling lights of this wonderful new technology, which, by the way, is not new. It's been around for a long time. And they don't really see the potential risks you face. Why on earth would you want to destroy your banking sector? And let me reiterate, let me emphasize this. Without a strong banking sector, you cannot have a successful, robust, sustainable economy. It just does not work because
Hmm.
without banks and without bank lending, you cannot have economic growth. It's just not going to happen.
Hmm.
And the big risk here is we run the risk of basically taking out a whole layer of capital that will not exist in the future because the central banks will potentially run the risk of replacing the commercial banks. Now, I don't think this is being done intentionally. I don't think there's any kind of crazy conspiracy,
Hmm.
but it's one of those unintended consequences. And I think we have to be mindful of this because we want to have an economy that is set for growth, not an economy that is limited in how it can grow. I think the other the other concern, which is a real concern that I have, is that when you speak to some of the central bankers and say, look, what is the purpose of these retail CBDCs? And they'll give you the narrative of, well, it's about financial inclusion. Okay, but 93% of people in the UK have bank accounts. 96% of people in the Eurozone have bank accounts. Who are you catering to? And then, of course, you understand once you have a slightly more detailed conversation that what it's really about is having the ability to have real-time control of monetary and fiscal policy. And that's a real worry because there is a huge amount of potential for abuse. Now, if the last couple of years has taught me anything, is that I believed I lived in a democracy, but there was a virus that came along that turned out to be less dangerous than the flu, and we were all locked in our houses for 2 years, and we became effectively a very different state. Is all I can say. I think
Hmm.
it's probably the kindest way I can describe it.
Hmm.
So it doesn't take a lot for a democracy to turn into a tyranny pretty damn quickly. So this is another concern I have. How much control over your financial life do you really want the government to have? Because let's not forget, the Bank of England governor made a very interesting comment beginning of the year saying, look, you can give your kids money and program it so they can't buy sweets. Well, that will never be prone to any abuse whatsoever. I know what happens if there's another allegedly dangerous virus and I can't spend my money more than, let's say, 5 miles from my house.
Hmm.
What if I say something on Twitter that is critical of the government? Rightly so. Will I be penalized?
Hmm.
These are all, I think, things that we have to, as citizens of a country, really, I think long and hard about before we implement something that, quite frankly, doesn't make any of the processes any better. We here in the UK have this thing called faster payments. We've had it for about 20 years. I
Hmm.
can make payments to other people in England or Scotland or Ireland or Wales 24 hours a day, 7 days a week, 365 days a year within minutes. Why do I need a central bank digital currency?
Hmm.
Now, don't get me wrong. In developing nations, like India, where my family originally come from, absolutely. You have a huge unbanked population that actually are very active on mobile phones. I think this is a really interesting solution. I think for parts of Africa, likewise, they kind of skip the phase of having landline broadband straight to mobile internet.
Hmm.
I
Yeah.
think for these regions, this is going to be a phenomenal lifeline and it's going to have a huge utility. But I think for the West, I just don't see the point. And I think the risk of giving away your freedom for the sake of convenience that isn't even that convenient, I think is a nonsense. The future of retail CBDCs versus, I guess, alternatives. And I guess the alternative is essentially bank issue stablecoins. We've already seen SocGen issue a euro-based stablecoin on the Ethereum layer one. I
Hmm.
think this is probably going to be the future. And effectively, the way in which this would work. So you look at people like JP Morgan, they've got JPM coin. The price of that really is a function of JP Morgan credit risk, which, by the way, of all the US banks, is the best credit risk. They are the guys I'd happily face all day long.
Hmm. Hmm.
Um, some of the other ones, maybe not so much, but maybe not a
Hmm.
discussion for this.
Hmm.
Um, but the way you get around this is that, let's say, for instance, in this example, SocGen took a charge over assets held with the Banque de France. Well, then it would trade at the same credit risk as the sovereign, so it would basically trade at parity. So you don't have this basis issue. So I think this is probably going to be a way you're going to see a lot of commercial banks issue essentially stable coins in partnership with central banks, so creating synthetic CBDCs. I think this is a far more sustainable way of doing this because it solves a problem. The second thing it does is it means Europe dominates crypto. Whether it wants to or not, it will do it. And it takes what is a $1 trillion industry and embraces it. This is a wonderful thing for Europe. This is a great, a great solution. Now, why the United States is so adamant at kicking crypto in the nuts, I have no idea. They dominate every single industry, but this one they've decided not to. I can't legislate for why, but anyway, if they want to throw me a free curveball, I'll happily pick it up and run with it. That's not an issue.
Well, my impression is sort of double-sided. I mean, I'm looking, I'm remembering Jamie Dimon saying, "Oh, crypto's not going anywhere." This was maybe 3 years ago or something like that. The public statements that he made, but then behind the scenes, J.P. Morgan basically established its own DLT slash digital assets unit to really research the market, understand what's going on with the technology, how it could be applied. And JP Morgan, I believe, is already conducting transactions in digital currencies and or tokens or stablecoins or whatever it may be, because I believe they created their own.
They
Uh,
did.
uh,
They did. They created JP
s-
Morgan coin,
s-
which was
s-
a dollar
s-
based stablecoin.
yeah, somewhat recently. So on the one hand, it seems to me like it's really the large retail and commercial banks were lobbying the government to slow down the adoption of crypto. But then on the other side, on the flip side, they're actually behind the scenes also doing careful research and work on their end to figure out how they fit into this whole new ecosystem, right? Of DLT technology, blockchain, and assets on this chain, right? It's stable coins, tokens. There's so many
Yep,
different versions of assets that are now available. So it is good.
absolutely.
It is a quite interesting situation.
So look, all I would say is that look, banks typically will say one thing publicly and they will do something very different behind closed doors. I can pretty much guarantee you every single bank at the moment is looking at digital asset custody, and they're looking at this not necessarily because they may be doing any trading today, but
Hmm.
they understand where the direction of travel is. They're not naive. They're smart people. They know where things are going, so they know where the future is. I think what most of them are looking for is really some degree of clarity, which so far with a lot of the developed nations, we haven't really seen, other than maybe Japan. Japan were the first to regulate stablecoins a couple of years ago. I think in terms of what Jamie Dimon has said, yeah, look, it doesn't take a lot to make people do a 180. Let's look at what Larry Fink said a couple of years ago about Bitcoin just being used by money launderers, and the next thing you
Sure,
know,
sure.
they're launching a spot ETF. So look, I think there's an educational process here as well. And look, I've got to be honest. I was one of the most cynical people in the world when I first came across Bitcoin. I basically thought it was just a state surveillance tool and an absolute waste of time as an asset class. I guess the banker in me was 100% sure that you don't develop a new asset class overnight, and this was not a new one. Now, the penny dropped for me when I realized, what is it about Bitcoin that's so special? And I hear this from a lot of people. Well, it's digital gold. I still don't really understand what that means because it's not gold. But what the penny dropped for me when I realized, what is it about Bitcoin that is so unique, and a lot of the digital assets, and it was really the first time in history that we were able to create digital signatures that could not be forged. And that's when I thought, wow, this could be a phenomenal piece of technology that we could apply across the entire market. And initially, obviously, OTC products like fixed income loans, but thereafter, pretty much absolutely everything. So, and then of course, then it dawned on me, actually, you know what? This is a new asset class, and that's, I think, a process you have to go through. And
Hmm.
again, look, I was very cynical. I still don't think, I'm not a Bitcoin maximalist. I'm a TradFi guy. I own a little bit of Bitcoin. I own a little bit of ETH. Most of my assets are in privacy coins because I value my privacy.
Hmm.
And I believe that we're going to see some pretty big moves in this asset class. But I'm not a maximalist. I'm not a Michael Saylor at all. Bitcoin is not going to replace the dollar.
Yeah, that makes a lot of sense. I was actually going to ask you a follow up because you mentioned, developing countries. There's obviously a lot of talk in the news about BRICS de-dollarization and this idea or some negotiations, I believe, that are going on to create some sort of single currency for the BRICS countries that would be pegged to gold.
So I think one of the problems I have with the BRICS, and I guess one of the problems the Western world has with the BRICS, is the R in BRICS is a bit of a problem. Okay, that's the biggest headache right now. Geopolitically, there are issues which I guess we're all aware of that mean that Russia is not flavor of the month. So anything that you do with Russia on any kind of currency is going to have an issue with any of the nations in Europe or the United States. Less so with Africa, less so with Central Asia, maybe even South Asia. But
Mhm.
fundamentally, you have these two trading blocks. You've just taken away 50% of the GDP potential for this.
Sure.
That's the first issue. The second issue is I'm a big fan um, of sound money. So look, I'm a big time libertarian. I believe in small governments. I believe that gold is money. and everything else is just credit. So yeah, I'm a big fan of this, but I'm also a realist. And the problem is, unfortunately, if governments were actually able to spend properly, then we wouldn't have the debt crisis that we're in today. But they're not, because invariably governments will promise people this, that, the other. If I get, vote for me and I'll give you this for free.
Hmm.
You can't do that unless you have deficit spending. And you can't have deficit spending if you have something that is a currency backed by gold. So I think that is the issue. They're the two major issues I have with this. So look, I would love nothing more for this to succeed. But unfortunately, right now,
Hmm.
having Russia as part of this ecosystem makes it pretty damn challenging for this to be adopted outside of that jurisdiction. And secondly, I think it's being a little bit naive about how governments currently work. Name one government that runs a surplus. I can think of one, but it's a tiny little island off the coast of the UK, and that's about it.
Hmm. Hmm.
Everyone runs deficits. So unless governments change the way they behave, which I suspect they won't, unless governments stop trying to bribe the electorate with promises of gift after gift if they're elected, then unfortunately, I think the project is probably going to fail. And all of this rhetoric I hear about, well, we're seeing a de-dollarization, we're seeing a replacement dollar. I think we will do. But one thing I would say is there's a big difference between the US dollar and every other currency in the world, be it the Swiss franc, be it the pound, be it the euro. And that one reason is, for instance, I've got in front of me, I've got a $1 bill from 1935. Now I can take that and I can spend it anywhere in the United States. I'd be an idiot to do this because it's worth $20. But
Sure.
I, but I could do. And the reason I could do is because the US is the only country in the world that has never cancelled its currency. The UK has, the Eurozone does so on a regular basis. India is notorious for doing so. And this is the reason why people, 75% of all physical cash US dollars are held outside the United States. And that's for this reason exactly, because it's a risk against, it's a hedge against risk.
Hmm.
So unless the US government starts cancelling its bills, then I don't think you're going to see this flight. And also the second question is that where does this flight go to? Where do you go to? I don't believe this BRICS currency is going to hold water in the long run.
Hmm.
So where do you go? Do you go into the eurozone? Do you buy
Hmm.
the euro? Do you buy the pound? Do you buy the yen? I don't think so. I don't think you do. So look, we are seeing a de-dollarization, and I think tantamount to that is obviously the fact that we're seeing the likes of the Saudis do deals in currencies that are not dollars. Right. So yes, we're seeing an erosion to the prowess of the dollar. But I think also fundamentally, let's think about this logically as well. In terms of ease of use, if I want to issue a loan in dollars, I don't need to speak to the Federal Reserve. I don't need to speak to the US Treasury. If I want to issue a loan in Japanese yen, I have to speak to the Bank of Japan
Hmm.
because it's their currency.
Hmm.
So I don't think people realize just how free and easy they are with the US dollar. So I don't think we're going to see this collapse. Look, like everything else, all empires collapse eventually. So yes, of course, eventually, yes, the US will be usurped, and I'm sure we'll see, some of the other nations come forward. But will people be using the Indian rupee or the Chinese yuan renminbi?
Hmm.
I don't think so, because you can only do one side. You can do left hand side of dollar India. You can do left hand side of dollar Chinese. And sorry, what I mean by that is that you can't sell the CNY.
Hmm.
You
Yeah.
can't sell the Indian rupee.
Hmm.
So if they're not fully convertible, they're pretty useless as a means of payment.
Sure. And the risks associated with them, of course.
Well, absolutely, yeah.
Yeah. No, that's
As my old boss used to say when I first joined FX markets, an emerging market is one from which you cannot emerge in a crisis.
exactly, exactly. And those crises usually start and or flow out of those types of regions, as history has laid bare, so to say. Manu, I totally understand and agree with all of your points. This is definitely something very, very interesting and something that we should all pay attention to and see how things develop down the road. But I thank you very much for putting things in a much clearer perspective for our listeners. My next question, we've already kind of touched upon this a little bit, but my next question relates to the Fed Now system that the Federal Reserve recently launched in the United States for instant payments. I don't know how familiar you are with Fed Now and how it works, but to me, at first, it seems pretty clear that this system can bring convenience, speed, and accessibility to really all U.S. residents, sort of like a government PayPal, quote unquote. But some people here in the United States have voiced concerns sort of about the potential effects of this FedNow system, namely theories that this tool could be used down the road to control personal spending. And really, I've heard this in relation to spending government benefits paid to residents, right? Like we just discussed how politicians, they promise a lot of freebies to people and things like that. Certainly here in the United States, the social safety net, as they call it, is quite large. Kind of wanted to get your thoughts on this. Is a lot of this stuff just politics, or do you think there are some concerns that we should pay attention to here as this system evolves, and in theory, if more and more people and institutions use this system called FedNow?
Okay, so yeah, so I guess FedNow is kind of similar to what we have in the UK, which is faster payments.
Hmm.
Or actually, no, it's probably more similar to SEPA. So FedNow obviously is a system run by the Federal Reserve. SEPA is a system that's run by the European Central Bank. Faster payments in the UK, I believe, is actually a private company owned by a consortium of banks. So a
Hmm.
bit like the Fed, basically.
Hmm.
So that's the main difference between this. Um, Again, if you look at the way this infrastructure has been set up, I think on the one hand, I mean, look, I spend a lot of time in the States. I have a lot of friends there, and the U.S. banking system, my goodness, is pretty archaic. So welcome to the world of faster payments that we've enjoyed in Europe for the last 20 years. But I guess better late than never, really. So that's good. So you're right, it is good, and I've sent payments when I've been in the States to other US accounts. It's taken 3, maybe 4 days, which is
Hmm.
crazy. So look, this actually fixes a real issue. So I think on that one hand, this is a positive. I think again, as I'm usually very cynical about most things like that are brought in like this, is there a risk of this being turned into something that becomes slightly more tyrannical? And yeah, of course there is, and that's the issue we have. I mean, I'm a big believer that I believe privacy is a basic human right. And I've heard a lot of rhetoric about FedNow and the fact that there are no real privacy protocols. And I hear this from so many people all the time saying, if you have nothing to hide, you have nothing to fear. Now that's fine, but that's the most stupid thing to say about a problem like this. It's a really, really strange belief system, because it's a bit like saying I don't believe in freedom of speech because I have nothing to say.
Hmm.
That's not the point of freedom of speech. So I think we have to just be slightly concerned when we're, again, giving away our privacy for convenience. And again, look, don't get me wrong, it solves a problem. The US banking system is certainly, the infrastructure is less than ideal. It's got some issues.
Hmm.
Fed now remedies those, which is great. Is there a risk that this may be usurped and used for something nefarious? Yes, but that risk exists in the UK and that risk exists in the Eurozone as well.
Hmm.
So nothing changes, because here's the thing. What people don't seem to realize is, did you know central bank digital currencies don't need to run on a blockchain?
Really?
No, they don't,
Mm.
because it's old technology. It's developed long before blockchains even existed. So you could run a Fed coin if you wished on these payment rails, no problem at all. Just like you could run a brick coin or a euro coin.
Hmm.
But I think that's a risk that we probably need to assess as and when things kind of move forward. But again, as I said kind of at the beginning of this, we have to sometimes look at this and question, how much involvement do we want of these central agencies in our own financial privacy? Is the big question I think we have to ask ourselves. And
Hmm.
do we want to give away all of this privacy for this benefit? Again, look, I'm happy sacrificing some degree of privacy for asymmetric payoffs of convenience, which I think you have with Fed now.
Hmm.
But how far do you go? And the one thing that concerns me the most about this is how you can potentially blacklist users almost on a whimsical basis. You could potentially exclude people, if the objective is financial inclusion, and then use it to basically exclude people because
Hmm.
of their
Hmm.
political beliefs. So, for instance, if you're a Trump voter and you can't use Fed now, that's not helpful. That's not useful. I don't think these should be determining factors on whether people can access the financial system.
Hmm.
But they may be, you could. I mean, that's an extreme example, of course,
Sure.
but but that's potentially where this could be pushed. And how much of a surveillance state do you want to live in? Because if you want to live in a surveillance state, go and move to China. Have everything surveilled.
There's plenty of countries. Yeah, there's plenty of countries like that
Absolutely.
in the world today. I wanted to take a quick step back. I wanted to ask you about the interesting post that you published on LinkedIn last month, where you talk about fungibility and privacy, and you explain how Bitcoin enables public verification and accountability, compromising user privacy. And you also find Monero to be a good option for those who truly want privacy because that protects users' identities, transaction amounts, and transaction history. I wanted to ask you, where do you personally stand? Is it privacy or no privacy? Is it a hybrid? And really, aren't there systemic risks to a widespread use of a fully private blockchain like Monero?
Okay, yeah. So look, all valid questions. So absolutely. So I think the gist of what I wrote was really about, I guess, explaining that what most people believe to be this anonymous internet money. Well, it ain't anonymous. It's the most trackable asset in the world. It's a public blockchain. You can track transactions. I guess my point was really more from an operational security perspective. So if you speak to any of the private banks across Europe, or if you speak to any of the large family offices, one of the biggest concerns they have is basically people finding out the real world identities of the pseudonymous, because again, they're not anonymous, wallet addresses. Because let's say, for instance, Nikolai, you've got a Ledger Nano or a Trezor with $50 million of Bitcoin.
Hmm.
Well, you're suddenly top of the kidnap list. So I think this is more from a safety perspective that we have to be mindful. And it's not like, let's say, for instance, I come up to you in the street and say, Nikolai, you know what? I need you to transfer $50 million to my bank account based in the Bahamas. Well, that's not going to happen.
Yeah.
But if I say I want that Ledger Nano stick and I wrestle you to the ground, I run off with it, well, it's gone.
Yeah. Yeah.
So this is more from an operational security perspective. That's the first issue. The second issue is you also have what is called potential future risk exposure, right? And what I mean by this is that let's say you buy Bitcoin today. Yeah, you go into the market and you lift the offer at 29,300 or whatever the price is. I forget the exact price today,
Hmm.
but whatever it is.
Hmm.
And then you basically, in other than 12 months' time, hit the bid at say $70,000. You bank some profit, happy days. You move on, you forget about it. Let's say in 3 years from now, it's used for something nefarious in the dark web, or for instance, by someone in, I don't know, a jurisdiction like Sudan or Iran or Russia or somewhere not good. What happens is that you are immediately put on that list of suspects, even though it has nothing to do with you. And if you speak to people like Chainalysis, um, you will be essentially blacklisted. You've then got to spend time, effort, and money proving your innocence. Well, why should you have to? It's got nothing to do with you once it leaves your account.
Hmm.
So I think you have to think about some of these practical elements um, before you venture too aggressively into this. And look, I think go into this with your eyes open and understand the risks that you face. But you could have adverse issues through no fault of your own unless you protect yourself and also leave yourself open from an operational security perspective to all sorts of things happening. So
Hmm.
so that's kind of what I was trying to make a point about.
Sure.
Now, if you look at the rhetoric you see from people like the Financial Action Task Force, they will have you believe that basically, the Colombian cartels, I don't even, if they still exist. Let's pretend they do. I don't know who they exist. But let's say some criminal organization is laundering hundreds of trillions of dollars through Bitcoin. That's just not the case. That's absolutely not the case. If you look at the figures from 2021, which I think was the last report the FATF did, of the $2 trillion that they said was laundered globally, would you believe 40% of that took place onshore inside the United States?
Hmm. Yeah, I saw that. Hmm.
I, I don't see the United States on any blacklist. It's interesting. And of the global amount of money laundered, about 8 billion was laundered by crypto, mainly via Bitcoin. But if you go and speak to people like the FBI and you ask them, they are delighted when criminals use things like Bitcoin because it's very trackable, very traceable. It's very easy to arrest them.
Hmm.
Now, in terms of your point about people using Monero. I use Monero because again, I value my privacy. If you look at the last couple of years, the biggest sacrifice that we all made was the sacrifice of our own privacy, telling the government where you were, being tracked and traced 24 hours a day, 7 days a week. So I believe there's intrinsic value in this privacy.
Hmm.
And could you see people starting to use things like Monero for nefarious things? Well, yeah, potentially. But the number one modus operandi or the number one asset that's used right now is the US dollar.
Yeah.
I don't see anyone trying to ban the US dollar.
Yep.
So I think we've got to be realistic about this. And we need to think about how likely are these to really be threats? And what are they actually threats to? And I guess what the governments are most concerned about is they couldn't care less about money laundering or crime. What they're concerned about is making sure they get their pound of flesh, i.e. their tax revenue,
Hmm.
which, I get,
Hmm.
you know,
Hmm.
governments are basically parasitic organisms that basically feed off the population. I totally understand that. You've got to pay them your protection money. But I don't think targeting things like Monero is going to solve anything because what I think they fail to understand is that it's a peer-to-peer asset. I don't need anyone to stand in between me and someone else to make a payment. I can do it bilaterally. There doesn't need to be an intermediary. So look, I take on board, what you're saying about the risks of these private blockchains, but or sorry, or these obfuscated blockchains.
Hmm.
But I think also there also has to be an element of this. Is last time I checked, I thought everyone under the law was innocent until proven guilty. We seem to have taken the exact opposite view of this entire asset class,
Yeah.
which seems a little bit at odds.
Yeah, yeah, totally agree. Totally agree. Manu, I wanted to sort of switch topics here a little bit. I wanted to ask you about the banking crisis we experienced in the US earlier this year. I know you've spoken to some journalists about this. Do you think that the crisis that we saw is really behind us now that the Fed is proposing new oversight and collateral rules for banks via the US Congress? Or should we actually be concerned about further contagion?
So I definitely sleep a lot easier knowing that the Fed is looking to put more hurdles in place. I think it's no, I'm joking, it's irrelevant. It's complete nonsense.
Mhm.
If you look at the reason the banks went bust, it's very simple. They didn't go bust because of anything nefarious. They went bust for two simple reasons. One was they had silly exposure to the California real estate market, which is collapsing, one reason. And the
Mhm.
second reason was because they had a whole bunch of long dated government bonds, their balance sheet.
Yeah.
And then when the Fed basically went on their slightly insane rate hike strategy, guess what happened? The price collapsed. As the price collapsed, there was a gap on their balance sheet, i.e., between where they bought those assets and where they were worth, or where they were valued on a mark-to-market basis. So when they had to liquidate those assets, there was a funding gap. That's why they collapsed. You put into that also a little bit of panic and fear,
Mhm.
and you've got the makings of a banking crisis. So nothing has really been fixed. The way to fix this is to cut rates, which the Fed don't seem to want to do.
At
And
this point, yeah.
I think I don't know what it's going to take. Right now, what is the cost? The annual cost now, I think, of the U.S. government debt is almost $1 trillion. And I think the issue you have is, and again, I haven't looked at the stats for a couple of weeks, is I keep seeing these wonderful prints of GDP, and I've got to be honest, I don't know whether the people collecting this data are maybe high on gummies. I have no idea, but it doesn't feel correct.
Mhm.
Last time I looked, there was over 4,000 stores that closed in the United States. I think between the beginning of January and the end of May. I don't know what the stats were for June. I haven't seen them.
Mhm.
And these are major players. These are people like Starbucks and Burger King closing 400 stores apiece. Now, you may think, well, Burger King, Starbucks, they have thousands of stores. They do. But I believe last time I looked, Burger King closed in H1 about 5.7% of all their stores. I think Starbucks closed about 4.5% of all their stores
Mhm.
in one half of the year.
Mhm. Mhm.
I've never seen that before.
Mhm.
Not even in 2007-8 did they close that many stores.
Mhm.
So if the Fed's objective was to destroy retail, then they've succeeded. Retail is dead.
Yeah.
Um, and I think the problem you have is, and again, look, this comes back down to my comments at the beginning. How much power and control do we want to give to these agencies that clearly have demonstrated their failings in the past? How many of these central banks or these regulators ever predicted a crisis? Not a single one. And I think we really run the risk of every time there's a crisis, we give them more and more power and more control. They're almost incentivized to let crises happen on a regular basis without finding a remedy.
Mhm.
So are we going to, is this the end of the bank crisis? Unfortunately, not. Are we going to see more banks collapse? Yes, absolutely. I think it's inevitable. We're going to see a bank of systemic importance, at least one in the US, collapse this year. I think we're probably going to see another bank of systemic importance collapse in Europe. I don't want them to, but unfortunately, that's probably what's going to happen.
Mhm.
And it's going to happen because these central banks will continue to hike until they break the economy and then say, now we can cut rates.
Yep. Yep. Mhm.
Well,
Mhm.
that's fantastic. And I think that the other problem here is you have this rhetoric basically from a lot of the Keynesian economists. So look, let me be clear. I'm not an economist. I didn't study economics at university. I studied a science, that has, not just an empirical science, but actually an experimental science, which, by the way, economics is not. It's not experimental. There's no laboratory. And that's why all the theories don't really work, or they work very poorly. So if you look back at the belief of Keynesian economics, they believe that, again, inflation is a function of money supply, which it is broadly. We printed a whole bunch of money in the corona crisis, and now we're seeing the consequence. We shut down the supply chain. Now we're seeing the consequence. So I get that. But there's another element that is always missed off the table. So did you know that before 1971, it was illegal to use US government bonds as collateral to borrow against.
I did not because I didn't study economics or banking. but but that's a good
No,
point.
neither did
That's a good, but
I.
that's a good
Right.
point, of course.
So, but here's the thing. I can go down to my local friendly neighborhood bank slash prime broker and say, hey, I've got 10 million US govies. Can you lend me 90 cents to the dollar? And they will say yes, probably 95.
Hmm.
So what you have is the belief before was that if you expand using a growth in debt, that should be less inflationary than by having expansion of the monetary base or money supply. But what you've actually created is a compounding effect because basically, what is government debt? Government debt is cash that has a coupon. So is this inflation issue going to go away? And the answer is no, it's not going to go away. The other thing to consider here is, and if you think back to the US had a big issue with inflation during the 70s. The reason for that inflation issue was because of the Vietnam War. The reason for the current inflation issue is a combination of a couple of things. One, an increase in money supply by 40%. Two is basically the destruction of supply chains. And three is the war that we're seeing in Ukraine.
Hmm.
That's also adding to an inflationary burden. So the combination of those three means it's going nowhere fast.
Hmm.
And they can keep hiking rates to whatever the hell they want to do. All they're going to end up doing is destroying the economy.
Well, Manu, to follow up on the banking crisis question, my impression is like at that time, right, of several months ago, there was also severe lack of traditional banks that were willing and able to service like NATO crypto businesses. Maybe this is partially because some of the banks that had issues or failed were banks that serviced crypto businesses already, right? And so there was like a sort of a negative effect there from both from a policy or a political perspective. I wanted to ask, did you see, during that time, did you see the same sort of in your experience working with at DeFinity and Crculus? And are these issues still front and center? Because they seem to be still front and center to me with respect to crypto businesses not being able to find traditional banks to work with.
So I think this is just all a coincidence. I think it's a complete coincidence that the banks that collapsed, on the whole, were kind of crypto friendly. I
Hmm.
also think it's a complete coincidence that the Financial Action Task Force has put the BVI, Cayman Islands, Bermuda, and UAE on their grey list,
Hmm.
um, or hubs for crypto.
Sure.
No, I'm joking. No, I don't think it's a coincidence at all. Look, I think it's clearly obvious. It was very targeted. So the collapse happened for the reasons I kind of mentioned before: exposure to real estate and obviously mismanagement of their own holdings of long dated govies were the principal reasons, I guess, for this. But I think, yeah, absolutely, there's a huge gap and there's a huge unmet need for basic banking services to the digital asset sector.
Hmm.
But I think that the problem you have is this. So if you look at what's kind of happening here, if you look at it from 30,000 feet, it kind of looks like it's a war on crypto, but it's not quite a war on crypto. There's a nuance to it. It's a war on the crypto native. So if you look at, let's say, for instance, let's look at the last couple of months. You've seen obviously this litigation that has been brought by the SEC against Coinbase by Binance. And by the way, Binance is 100% political. But anyway, we
Hmm.
can discuss that at some point.
Sure.
At the same point in time, we see Fidelity come out in partnership with a large Chicago-based hedge fund to build a crypto exchange. It's odd, isn't it?
Hmm.
That on the one hand, the SEC is delighted and happy to embrace them, and on the other hand, they're pursuing them in court. So it's not so much a war on crypto; it's a war on the crypto native. That's what this is. The regulators, as far as I can tell, want crypto to be really run by the banks. And in principle, I have no issue with that. Now, don't get me wrong, banks have done some pretty nefarious things and have been caught doing things they shouldn't have been. I fully put my hand up and say they have. In fact, last time I checked, I think between 2000 and the end of 2022, banks were fined about $377 trillion.
Hmm.
Billion dollars, $377 billion, which is about 1.72 times the market cap of Ethereum. So banks do bad shit and they get busted, they pay fines. However, let me explain something about banks. When banks collapse and they go bust, there's some glimmer of hope of getting your money back. So, for instance, when Lehman's went bust, and yes, it took a decade, but the creditors got back 70 cents on the dollar. What do you reckon the people that were the creditors to not Silicon Valley Bank, sorry, Sam Bankman Fried and FTX will get back? I can guarantee it'll be somewhere close to zero.
Hmm.
So, do I believe that banks should be running this sector? I think probably yes, they should be. I think crypto should be dominated by banks, and that's exactly what's going to happen. So, in answer to your question, is there appetite and is there hope for some of the crypto natives? I think yeah, there is. But I think I think there needs to be a bit of a reality check in terms of what they're doing,
Sure.
and there needs to be a change in their understanding of how financial markets work. So, for instance, I always hear this rhetoric from a lot of the crypto natives about how they're going to disintermediate banks. The reality is, when it comes to things like lending, banks are not intermediaries. They're principal. They're the guys that create the money.
Yep.
You can't disintermediate them. Now, do I think we should disintermediate banks from some subsets of lending? Yes, 100%. So banks should be lending to small to medium enterprises, because when you lend to SMEs, for them to buy plant machinery, hire people, it creates basically productive assets that are non-inflationary. So basically increases GDP without creating inflation. Um, and if, however, you lend to, for instance, non-productive assets like real estate, you create asset bubbles and you basically create huge amounts of inflation. So I think there needs to be a shift in terms of how this is done. And absolutely, I think the crypto natives are very well positioned in place to take over things like real estate lending, but they need to stay away from things like lending to SMEs, because that is really best served by banks.
Mm-hmm. Yep, makes sense. Manu, my last question relates to emerging markets FX. You and I spoke earlier this year at Trade Tech FX conference in Florida, and you indicated that you believe that demand for emerging markets currencies is going to increase regardless of volatility in those markets. Have you seen this trend materialize as we're now sort of in the middle of 2023, and also all of the geopolitical happenings that have transpired over the time?
We have, absolutely, yes, definitely. And look, my logic behind this is twofold, right? So I think the first element is economic, right? And the second is, as you kind of rightly mentioned, volatility. So if you look at the composition as it is today, of global GDP, you've got basically the G7 versus the E7. The G7 generates probably 45% of global GDP, the E7 probably 35%. That's going to flip on its head probably by 2030. And we're going to see the E7 probably have, or in fact, contribute more to global GDP than the G7. So it's really a shift that we're seeing from a macro perspective. It's not going to be that much longer before we see countries like India usurp countries like the United Kingdom and Germany
Mm-hmm.
in terms of where their GDP is. Now, obviously, look, I think gross GDP of a country is one metric. I think GDP per capita is probably a better metric, because that really is a more sustainable measure, and that's going to take far longer. But just from a gross GDP perspective, I think that's the first element. Now, if that happens in the way I think it is, and in the timeline I'm suggesting, then you're going to see clearly an increase of trade flows. Now, trade flows are typically what determine what happens to those currencies. And I guess in terms of volatility, it's quite interesting. So I think we spoke at a very interesting period in time, because up until probably about maybe 2022, you had seen this huge lull in volatility. And then lo and behold, we saw that lull disappear when we saw the central bank start to hike very aggressively.
Mm-hmm.
So we've seen a resurgence of macro volatility that it's at a level I haven't seen, certainly in my career. So probably I'd say maybe the late 80s is probably the last time it was at these levels. And we've seen a big spike in volatility. So we've seen, I think, both an increased demand and an increase in volatility. So from the perspective of requirements and need, there's a greater demand from consumers of those currencies to have access to those. And I think from those that are traders, vol is great for basically trading risk. So there's been increased demand from those counterparties too.
Well, Manu, I wanted to finish up. I know you told me that it's rainy and quite dreary in the UK at the moment. I was going to ask you if you've had any exciting or interesting trips this summer, but it sounds like you're planning on doing so in the near future rather than have already done them. But I guess I wanted to ask you just as a personal question. So when you do have time off and the weather is good, do you usually go to the south coast of the UK, or do you go maybe somewhere in Europe in particular, or some exotic islands or something? I don't know, Capo Verde or something. Sort of, what's your take on time off?
Yeah, so I run the risk of running out of summer before I actually go anywhere. But yeah, no, I love going to the south coast of the UK. I absolutely love it. I'm a big fan of Dorset. I absolutely love going down to the south coast there. Beautiful beaches and wonderful part of the world, and great to get away from the hustle and bustle of London. Outside the UK, big fan of Portugal. Absolutely love the Algarve. wonderful place. Love the food there as well. So yeah, they're the main places I try and go to. Anything further afield and more tropical, no, sadly not.
Uh-huh.
Perhaps at some stage in the future.
I see. Cool. Awesome. Well, Manu, I wanted to thank you for taking the time to join me today and give us your insights and perspective on a lot of these very important topics and sharing your views. Definitely worthwhile for myself and I think for listeners as well. We wanted to wish you the best luck with the end of the summer. Hope you get some time off and hopefully we'll see you at some point before the year end at some work or industry event and hope to catch up soon.
No problem at all. Thanks for having me on.
Thanks, Manu. Cheers. Thanks for listening to our latest Finance Feeds podcast episode. For sponsorship opportunities or to become a guest, please email us at info@financefeeds.com.